Hello, everyone, and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. Before we get started, standard disclaimer: nothing you hear today is investing advice. Do your own due diligence. And today's guest is a portfolio manager in the mining space and the president of Feneck Consulting Group, Mr. John Feneck. Welcome to the show.
Hey, thanks, Jesse. Nice to be here.
Happy to have you here, and I want to get started like I do with all my new guests on their origin story when it comes to investing. So, what initially drew you to investing and ultimately led you to the mining space?
Sure. Being poor growing up. I started in finance right out of school at 21 with Merrill Lynch Funds, which is now BlackRock Funds. I started as an equity analyst there on the popular Global Allocation Fund, which is, I don't know, 50 billion or something now, crazy. But was in sales and worked with PMs my entire career through BlackRock, JP Morgan Chase, Sprott, a bunch of different stops. And then in 2019, started my own shop. Started running my own money in January of 16, I should mention. So my track record in portfolio management and mining is now almost 7 years. We're top decile for 3 and 5 years ended September 30. So we're very proud of that. And we're doing it with a smaller team, but we're doing it with, 12 to 14 hour days. We take it very seriously. Not that our competition doesn't, but, we're not phoning it in even on a week like this where there's light volumes. We're seeing obviously great action today, and we're taking advantage of that and getting up, at the first crack of dawn and hitting it pre-market. So, we're trying to eke out returns in any which way we can. To me, it's all about portfolio return at the end of the day. That's what clients want, right? So you can't always deliver, but you do the best you can. And so over the last 3 years that I've run my consulting shop, along with just being independent, it feels great, and I wish I did it sooner.
Awesome. Well, I wanted to dive a little bit into gold and silver, the precious metals miners, with you today. But before we dive into that, I want to touch on a comment you made in a recent interview where you stated the commodities sector is starting to see more interest and build some momentum. Could you break down the indicators you're seeing that helped you come to that conclusion?
Sure. Obviously energy's gotten a nice bump this year through something terrible with the Russia, Ukraine conflict. Oil has got a nice floor on it. We saw just yesterday, down 5% on USO, the ETF that tracks the price of oil, and then it snapped back to a positive return at the end of the day, which is crazy. Nat gas has been in an uptrend for a long time now. If you look back, though, 2, 3 years ago, if we were recording this, it was the worst commodity for many, many years in a row, right? So, like, some of these things have come out of nowhere to really shine. I think that's going to be true of gold and silver next year, because gold, as you may have seen, since 1967, there's never been a year like this, 55 years, where central bank buying is going off the charts, but the price of gold in the retail space hasn't done much. And so I think that's an indication that there's got to be a break either way, right? And I don't think we're breaking 1550 to the downside. We've been very vocal all year that that's going to hold, and it has so far. It's a relative comment, Jesse, in that, gold hasn't broken support. Silver didn't completely break down to the 1516 level like a lot thought, held 1740 and really bounced nicely since then. Palladium has been all over the place this year because, 41% of the world's palladium is produced in Russia. So that's been super volatile. Platinum's starting to break out now, which is PPLT. You look at copper, it hit an all-time high this year. So we've had commodities going crazy in every which way. But the fact that we're getting, gold to where it was in Q1, copper to where it was earlier this year, it's very bullish because we're making new highs.
So I want to get your thoughts on, I'd be remiss not to ask you about the FTX meltdown, and if you think some of that speculative money might end up in the mining sector, in things like gold and silver equities and things like that. Do you think that's just all noise and that eventually this will die down? Or do you think that had a massive implication on investor psychology, and perhaps we're going to see some of the Cryptobros moving into our territory in the future?
Well, I don't know about the Cryptobros, but I would really love the Wall Street, Reddit guys back. We saw them twice since January of last year, and it's really fun to watch some of my stocks get pumped, pre-market, it's pretty wild what they decide to get behind. But if any of them are listening, I'd love to talk to you, and offline. So, the cryptos thing to me, Jesse, I'm going to get shelled for this again probably, but we own zero crypto. We've never touched it. I don't like unregulated markets, and now you're seeing why. It's been an absolute disaster. I don't know that it's completely over yet. We're getting more information, right? So I just think that, yes, some of that speculative money could help our sector, but really what's going to help our sector, in my view, is the broad market breaking down. Because when you see portfolio managers starting to worry, right, that they can't go back to their tried and true, like Apple, Amazon, Google, Facebook, when these things break down like they have this year, it's significant. Believe me, if you sat down with a bunch of billion, plus managers, they'd be telling you off camera they're worried, right? That's that they've got to keep a game face on for CNBC, but you got to be kidding me. If Amazon's gone from 181 last November to wherever it is now, 100 or something, you're worried. I mean, that's a bellwether for any, large cap growth manager or core manager, right? So that's, we'll see how it plays out with crypto, but it clearly isn't hurting gold and silver.
I'd like to get your thoughts on silver because you touched on some of the tailwinds for gold earlier. But silver, there's a few things going on right now. Of course, its long history as a monetary metal, as well as the massive amount of industrial applications. There's also a lot of talk about its use in solar panels these days and how important silver is to solar panels, which are getting made more and more in this push for a new green economy. What are the tailwinds you're seeing for silver right now?
So silver's so bombed out when you look at the commodity complex. It's trading so badly over the last number of months that it is going to play catch up, right? When you look at the gold silver ratio, I haven't looked at it before we got on camera, but let's just call it's 80, right? The price of a gold ounce divided by the price of a silver ounce. If you go back 42 years when they started to track this publicly, there's only been 3 or 4 times that it actually crosses 90, which was recently. And silver hit 90.59 and bounced right away up. It's never been a bad trade to buy silver or silver equities when you cross 90 on the gold silver ratio, ever. So, that's when we got more excited about silver equities. Again, very contrarian, but look at what's happened. I mean, some of these silver equities have really started to take off here, which is fantastic. I think silver and silver equities right now are very attractive. They've been actually leading this short rally we've had since November 4th.
Well, let's touch on the mining equities, gold and silver, or any other ones. Are you seeing any opportunity? Let's talk first about the gold and silver mining space. I know that you obviously see opportunity there. You've just been speaking about that. But if we separate between explorers, developers, and producers, is there any one of those that you're more bullish on or that you see more value in at the moment?
Well, producers will always do best out of the gate when you have a rally, almost always going back to the '08 crisis. It happened in '08, it happened in December 15, and it's happening again now, right? You've got AEM breaking out almost today at $49, Newmont's at 46 plus and trying to break out, with a 6% dividend. Really good action in the producers. And why is that? Just for some of your listeners that may not understand, it's because you're producing, right? If you're AISC, your all-in sustaining cost is $1,100 an ounce and gold's trading close to $1,800, you're making $700 an ounce margins. If you're a developer or an explorer, you're not there yet. You're not producing, right? So you're not going to realize that gain right away. But what happens, Jesse, and we can use, summer of 2020 as a proxy for this, the producers led, May, June of 2020 into August when we peaked out. But developers and explorers caught up pretty quickly, and that's what we're betting on this year. We started to really overload the explorers in our portfolio starting in probably July, August. It just got to the point where I was like, this is crazy. I mean, these things were trading at 80% higher, 90% higher, 2 years ago, right? So it's gotten completely oversold on the exploration side to me. Because what does a producer need? They need to continue to produce, right? You have to replace your production somewhere down the line. You're starting to see some M&A activity in our sector, which is positive. Most recently with the Amana deal, right? With AEM and PAAS, joining forces there and outbidding Goldfields, which is positive. I mean, not that Goldfields, feels that way, but I mean, it's positive to see a bidding war on anything in our space, right? It's a good asset. Why not? So I think we're going to start to see the developers and explorers start to get some love into 2023. We're just not there yet.
So, could you give us some factors that you look for when you're evaluating a mining company, and conversely, maybe some red flags that make you think twice about making an investment?
Yeah, great question. I would say, management is my first screen. I've said that every interview I've ever been on, because just today I talked to 6 CEOs and they took my call the first time, right? Like I couldn't say that back in 2015. I was just getting, my Rolodex built, so to speak, right? In '08 and '09, I met, CEOs at AG, First Majestic, Coeur d'Alene, CDE, and these are people I still talk to, right? 14 years later. But now I have a Rolodex of maybe 300 companies that I can call and get information from my followers and my clients, public information, right? So give you an example of that. I'm on the phone with a little copper play today, and it turns out that, the company, did an initial public offering. When you do an IPO, you have a bunch of different players involved, and some of them are hedge funds, right? And some of them are not doing well, maybe because of crypto, right? So they have to sell other assets that they don't want to sell to meet margin calls or, to stay solvent. And so this is what's happening with this little copper stock under a penny. It was at 5 cents earlier this year. It's now trading 80% off. I called the CEO and he said, there's nothing material going on here. It's simply a big seller out there. And so we bought a bunch today, right? It's like that kind of stuff where a simple 1 minute phone call can really make a difference. So I always encourage people like your listeners to make those calls, and if you can't make the calls because you're busy, I work with a lot of professionals, doctors, lawyers, construction workers, guys that are just not available to make these calls. Well, let me do it for you. So we try to, we have a newsletter, we've got updates, we can do phone calls. We do a lot of different services for clients that are just too busy to do it themselves.
This is the Uranium Element Cube from Engineered Labs. They're a sponsor of the program now, and the reason why is because I genuinely love this product. I've always wanted to get real uranium in my hands, and that's what this is. That crystal in there is 50% uranium by weight. The acrylic shield surrounding it reduces the radiation emitted to a very low level that is completely safe. Engineered Labs also ships worldwide, which is great. The products are made in the USA, and if you use my discount code Commodities at checkout, you'll receive a 10% discount on your order, and you will be supporting this program. The Uranium Element Cube, link is in the description below. And now, back to the program. So you have a little bit of a contrarian view within the gold and silver space, because we were talking before the interview started, and you mentioned you think right now is maybe not the time to be stacking physical gold. And most of the people, the proponents in the precious metals I have on my program, stress that is the most important first step everybody needs to take before they even look at the equities. So could you maybe describe why you think that now might not be a time to stack physical and your viewpoint on that?
Sure. Days like today where you've got equities up, 3 to 9% across the board and gold's flattish. It's so frustrating to own physical on a day like this when you're looking at gold equities, which, should be flat as well if gold's flat and are getting a bid. Why? Because they're so oversold. We've reached an oversold condition in the mining space. Okay. So to give your listeners some perspective, August of 2020 was the high. No one disagrees with that, right? So looking back at that, that's 27 months ago. The average correction in mining going back to 01, 02 is 6 to 8 months. Okay. This has been 24 plus months. This is a triple. There's been a lot of pain felt here. There's a lot of people that are just, sitting there crossing their fingers. That's not a strategy. You've got to have a strategy, right? So I always tell people, if you bought something in 2020 and you still have conviction in it, you got to buy more now. I know it's painful, but you got to buy more. Lower your average cost. And we do that. We don't just say that to people. We actually do it. We buy 6 to 10 times on the way up. So I don't put a lot of money, Jesse, in any one particular day. That's what makes me different from a lot of my competitors, because some of these newsletter writers will buy once, maybe twice, but then they're done, right? And they sit back and they watch. And to me, that's a flawed strategy, because in a market like this that's so volatile, you want to be buying in multiple times, because I'm not smart enough to know what the exact day is, right? No one saw November 4th rally coming. No one. I can tell you that. I mean, I was at conferences in Beaver Creek, in Denver, in New Orleans. The sentiment was not very positive leading up to that rally.
So I'm curious about how you evaluate these various mining equities. Are you taking it from a strictly fundamental perspective? Are you also using technical analysis? Is it a combination of both? And how do you do that research that leads you to an investment decision?
Sure, yeah, it is a combination, but we always lead with technicals, always, because I've just found I got taught that 22 years ago by my financial advisor, and he showed me charting. And I'm not the best at it, but I'm pretty darn good at it, and I know how to look for that first to get more conviction, right? And then I use other websites that do more advanced things to determine support resistance, kind of to back check my own work. And then I'll call my analyst and say, "Hey, let me run this by you." If I need to, and so I'm fact checking myself all the time. That's how good people in any business do it, right? Like, you have to check yourself, because sometimes you could be over exuberant coming out of a conference where you sit down with the CEO for a half hour. Story sounds great, but maybe it's not going to be great for 6 months, right? So what's the rush? You gotta look at everything. From my perspective, you look at everything like 1 to 6 months out. I don't care what's happening in 3 years. I don't even know what the world's going to look like in 3 years. I'm looking at 1 to 6 months. What's your catalysts? And let's combine that fundamental analysis with technical.
So, what about for somebody who's new to the space looking to get exposure to gold and silver? Obviously, you think now's not a great time to be stacking physical. Would it be, and maybe this person doesn't have enough time to do all of the deep dive into these various equities, and maybe doesn't have the knowledge either, but they're bullish on the fundamentals. Would you recommend they go in, aside from hiring a firm such as yours to help them out, would you suggest that they go into an ETF, look at the big producers? What would be your approach?
Yeah, that's a great question too. And I mean, if you look at GDXJ as a proxy for the small mining stocks, and this is not a knock on Vanek or the ETF, but it has done very poorly over 5 to 7 years. I mean, buying and holding our sector doesn't work. It just doesn't work yet. It will work at some point, but right now it's not, right? So, like, that's sort of the lazy man's game. I'll put 50 grand into this and we'll see what happens. Okay, well, look at the chart. That's what happened. Nothing. It's like, it's done a lot of this. So as portfolio manager, you have to trade those peaks and troughs, and it's very difficult, and it's a lot of work. There's no easy lunch in mining. Period. It's just hard. So I would encourage people to align themselves with a financial advisor, with someone like myself, with someone that they can believe in on YouTube, whatever that is for them. But try to align yourself with maybe 2 or 3 people, right? Because financial advisors, and I worked with them for 27 of my 30 years, they are not really tuned into our sector, okay? It's less than 1% of the S&P, the Dow, the NASDAQ, and the Russell combined. Less than 1%, okay? It's not 20 like technology. These guys and women are not really focused on our sector. So if you're going to them and say, "Hey, what do you think of Newmont versus BTG?" They're going to be like, "What?" It's just... there's you have to create a toolbox of professionals, right? And then use those tools when you need them.
That's a really great approach, because you're right. Most traditional financial advisors would have no idea what you're talking about. If you mentioned something like gold and silver equities, they probably wouldn't want to touch it. And uranium, something even more obscure that most financial advisors wouldn't even begin to understand. And I do want to touch on uranium with you, because I've heard you mention it and discuss that you're bullish. So I'd like to know what are the fundamentals you're seeing that make you bullish as we sit here today, and are there any companies in particular you're investing in or that you have on your watch list in that sector?
Sure. So I've been tracking uranium since 2017. I haven't done much buying in the space until about a year and a half, 2 years ago. But Rick Rule, when I worked at Sprott, taught me a lot about uranium. He was a huge bull back then, to his credit. The market was nothing. No one had any interest in it, but it took a few years, as you know, to get there, right? So what got me more interested recently in recent years is Sprott going out there and buying a ton of uranium, right? And like, really, I don't want to say cornering the market, but look how a 20 billion or so firm took an entire commodity and took it over. I mean, it's pretty amazing. So that just shows you how thin the uranium market is, right? Like, that's what it taught me. So that got me interested in okay, URA is sort of like the ETF that, you want to use or something similar to that, for a core position. I like stuff like DNN, Denison, but also, I like some of the juniors like Forum right now. I just did a webinar with them last night with some high net worth clients. It was trading at 8 cents US. It's up a little bit today, but at 8 cents, it was at 47 cents US this time last year. I mean, ridiculous, right? I mean, Justin Hune was a believer in the stock at the time. He got out of the stock, as you know, Jesse. He's got 4,000 paid subs or so, from what I hear. So when you get out of a stock like that, it's going to cause an avalanche of selling, and it went from 47 to 11. And so we started a position last December at 11. And was that right? No, it's at 8. So I was early. I bought some more at 15. But my point is, I'm buying triple my position at 8. So, now my average cost is below 10. So at 10 cents, I think that's a really good risk reward. When you look at, here's my position at 10, it was at 47 a year ago. What's changed? Nothing. So, I think what is good about the company is, in listening to them last night, is that they went out there. If you look at their February 1st news on Forum Energy Metals site, they went out and staked a bunch of claims that CCJ, Cameco, used to have. Okay. So, that large companies like Cameco can't do everything all at once, right? So like sometimes they walk away from something that they put some money in the ground in. Well, they put about 70 to 80 million Canadian in this particular region. And Forum just bought it for 165,000 Canadian. So that is tremendous value. They're going to be spending some time and money drilling that out next year. And that's why we're excited about the stock. It's not just their position at Wollaston in a region like the Athabasca, which is fantastic for uranium, but now they've got this other region that they're going to be able to explore.
Great. Well, same question maybe about gold and silver miners. You mentioned some of the big producers. Are there any other names you're seeing opportunity? And I want to preface this with, a lot of interviews go into stock picking, and then people watching think that the due diligence is just listening to what the person says and buying whatever they say. But guys, you need to do hours upon hours of due diligence into individual companies before making an investment. But with that being said, as a little bit of a disclaimer, is there any companies in the gold and silver space that you've got your eye on right now?
Sure. So I echo what you just said. I mean, it takes a lot of work to do this, and by all means, my risk tolerance may not be a listener's risk tolerance, right? I am buying more explorers, as I mentioned at the onset, right now than I am the developed stuff. It's an easy thing to buy GDX right now if you just want to buy the large cap space. It is showing some good momentum today. Which is, one of the only days I've seen in recent months where I've seen that kind of algorithmic buying almost. So now that we're through $28, your next target's 30, which is a nice target. And if you crash through that on a monthly close, like January 31st or February 28th or whatever, you're going to be off to the races in our sector. So, I think PAAS is interesting in the large cap silver space because of the Yamana deal. They've gotten thrown out the window, and it's just such a great company long term for silver. I mean, with $30 silver, that thing's going to rock and roll. But the smaller stuff in silver, let's start with that. So AUMN is our top holding in silver. AUMN is really misunderstood in that it's a producer right now, a small producer. But they're going to produce at Velardania, which is next to Rodeo right now that they're producing at. They have a mill that they can share. So they've got a game plan in place there. They're going to do that next year. But what's exciting to me is, they have this huge project in silver in Argentina that's joint venture with Barrick. So when you have a JV with Barrick, there's pluses and minuses. The minus is they have 30 other projects that are ahead of you. So you're not important to Barrick. I'm sorry. And the company knows this, right? And so what do? You did the right thing for shareholders. You JV'd it 2.5 years ago, but there's been zero news flow. I think 5 holes have been drilled. But now we're getting to a point where they have to make a decision, right? So in my view, I think they're going to, advance the project. If they advance the project, I think that's a nice catalyst for the stock because the stock is trading like that's not going to happen. So again, it's just from talking to the company, doing that due diligence that I found this information, and it's just my guess. It's 50-50, right? But the people I talk to at the company are pretty excited that they have a couple of different projects, not just one, that are exciting. And then if you move to the gold space, there's a couple of names that have near-term catalysts. So let's see. This is a really small one. It trades thinly. Thunder Mountain Gold is THMG. They're in Idaho. They've been doing it since 1935. And they're right at the point now where they have a partnership with B Metals. For those of you that don't know, BTG, which is Clive Johnson's baby, Clive is directly involved in B Metals as well. And they have a really good, if you look at their news flow, they have a really good catalyst coming up here by the end of Q4 where B Metals has to make a decision on their Idaho property, South Mountain. And I think that it's a win-win for shareholders. If they walk away, it's a win. If they continue to advance it, it's a win. It's really just, you have to read more about it. We don't have time to go into it here, but I would encourage people to look at the website, Thunder Mountain Gold, and take a look. I mean, it trades very thinly, but man, it was at 33 cents. It's trading at 6.5 cents right now. So we look for values like that, Jesse. Another name that's sort of morphing itself from gold into something different, we were just talking off camera about battery metals, is Idaho Champion, which I think is another misunderstood stock where I talked to the CEO in Q1. I said, the two projects you have in the gold space are great, but they're not getting it investors super interested, right? Like, they're still a long way from production. What else do you have here? It seems like on your website, you've got all these cobalt claims. And then we started to talk about that, and their claims are the largest amount in Idaho by any exploration company, but they're right near Jervois, which if you look at Jervois' chart, decent looking chart until recently, but they in October went into production. So they're like the first company in Idaho to go into production in cobalt in years. So, you kind of look at that and say, okay, Jervois could buy their claims, or they could round up a bunch of different claims because there's little parcels everywhere and then sell it to someone else. So look at Idaho Champion's April news. They do a joint venture with an Asian company, right, in cobalt. It's like, so maybe the Koreans or someone in Asia is interested in buying that piece of the company out, or maybe they do a spinoff. There's so many different things that you can do to generate shareholder value. And I think, Jesse, one of the problems with our sector is that people get so down on themselves. They just see all of this negative action with making lower lows, and they don't sift through these little stocks and say, okay, well, not everything is going down. Stuff in 2023 is going to go better for me, and I need to align myself with companies that are, thinking this through and making a difference.
Final question before I let you go. We've discussed uranium, gold, silver, a little bit about cobalt. Are there any other commodities out there that you're bullish on at the moment? You mentioned oil and natural gas at the top of the show, maybe that, or is there anything else you're seeing out there?
My top pick in nat gas has been Trillion Energy, which is TRLEF, for months. I found that stock through my research, 2.5 years ago. I have a large following in that stock. It broke out today on some decent volume, which is fantastic. But that is, something we need to watch because nat gas prices are in Turkey just going off the charts, right? So like there's a huge amount of upside there if they go into production, which I think they have every intention of doing. When you look outside of energy, into other commodities, there are some in copper that look ridiculously cheap right now to me. As I mentioned, copper broke out earlier this year. It completely faded. I get it. But you have to ask yourself, is copper going to continue to fade and break $3 to the downside? And my answer is no. So it is going to, get back to where it needs to be, but it's just going to take some time. And companies like World Copper, WCUFF, to me, present tremendous value. In Arizona here, they have one of the projects, Zonia, but they have a larger project in Chile, Escalones. And when you look at where copper is produced globally, 45% of the world's copper comes from Chile and Peru. So, when you look at the different projects that they're competing against out there, there's nothing with an internal rate of return close to what theirs is on Escalones. And that's 46%. So when you look at that alone, right, at 15 cents US, you say, okay, they could just sell Escalones tomorrow and focus on Zonia, and it's going to double the stock, right? Because Escalones is worth 15 cents a share, in my opinion. So, it's really crazy how these things trade down from 80 cents to 15 cents. and can't catch a bid some days, and you're wondering, like, where is everyone? Why are they always focused on Freeport and all the big boys? You have to look down in capitalization sometimes and say, okay, I like copper. I need to start looking at some smaller names too.
Well, thank you so much for joining us today, John. Tons of wisdom shared. Really appreciate it. For those who want to hear more from you or learn about Feneck Consulting, where should they go online?
Yeah, sure. It's feneckconsulting.com. I'm very accessible personally. I take good pride in that. And, if you want to send an email to me, it's john.feneck@yahoo.com. I try to tailor programs, Jesse, to someone's needs, right? So I've lived through 4 hurricanes. A hurricane victim came to me last October with 4 kids and said, hey, I don't have what your website says right now, but I'm good for it down the road. And it really meant a lot to me. And he's still a client, and I gave him a good discount on services, right? Because I'm trying to help people during a difficult time. We're trying to work with people within their budget. Not everyone is identical. So, we started a newsletter about a year and a half ago in the commodity space, which covers a lot of the areas that we talked about today. So I'm not just gold and silver all day long. We write on a bunch of different topics.
Great. Well, I'll put a link to the website in the description below. It was awesome having you on, and hope to have you on again in the future to continue the conversation.
Thanks a lot, Jesse. Appreciate it.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.